Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
And I don't want to confuse anybody, but to go forward, this is now a weekly chart looking at the same system. Very quickly here. Again, for those of you out there that have mutual funds or stocks, this is a great system to apply for that, what I would call an active investment approach as opposed to passively investing. You can see over here where you're essentially bullish for a good part of the time on the left half side of your chart. Then you go over here to the center part of your chart from here to here, and look how much you can either avoid, and sorry about that, look how much you can either avoid or even profit off of on the downside from the bearish trend that we had back in 08 and leading into 09. So there's a lot of different ways to benefit from an active investment approach. You can see over here again from the weekly standpoint, we just reviewed this in a daily, so it's much more active. But when you take a step back on that weekly, look at that. I mean, look at this, how close we got to picking out that reversal bottom within several weeks. And from taking a step back, that's phenomenal if you can do that. So if and when you do that, when you're using the system. So that's the beauty of this, is that it can be objective and help you get there. Robert, yeah, the BTTK just stood for Big Trends Toolkit. Basically, it comes with, it's a Big Trends, it's a meta stock add-on that you can purchase and receive all of our systems and indicators pre-built for you if you're a meta stock user. We also have some of the access for that for other trading platforms like Thinkorswim. Warden Brothers is coming soon. I've been working with them. And he says, is %R better than RSI, and how and why? It's a great question. You know, we obviously prefer %R. I see that I have a couple of people saying that there's no noise. You know, do me a favor. Let me know if you can hear me okay right now. Okay, great. Well, I apologize if you can't hear me. I know it looks like Shafter. At any rate, yeah, we have also a Warden Brothers coming out in Genesis. We used to have a Genesis Trade Navigator plugin. We may still have that, Shaw. So what you'd have to do is just send us an email at clientcare@bigtrends.com. I know that we used to support it officially. It's been a couple of years. Anyway, finally, getting in from, we looked at our sentiment things, and now then we looked at trend-based systems. Now, how do you really fold in just simple? And this will be the simplest part of this. Kind of save the easiest for last year, but support and resistance. You know, we all know or should know what support resistance is. I mean, it's not just some crazy technical black magic levels that someone's created up there, but in the end, what does it come from? I mean, they're real levels. I mean, think about when a very, very large mutual fund purchases a certain stock. They have a cost basis, right? That cost basis now becomes their level of their line in the sand, i.e., are we going to, you know, if it goes below this, then we're taking a loss. And nobody wants to take a loss. So that's where you typically see support levels created. Then, you know, I mean, there's other resistance levels, which could certainly be just anywhere from a round number to, you know, obviously, if you think about the Dow is probably the most easy one to think about. Let's say 1,000 point increments get you very rough numbers. But the easy part about this is that many of these can just be ascertained from looking at the chart. The same time, though, that leads to their biggest weakness. The biggest weakness that I see traders out there, and it really makes them either feel really good about themselves or really bad about themselves, is that they start drawing their own trend lines And really, there isn't an exact science for that. You can do from lows to closes, but you and I can look at the same chart, and if we weren't looking at each other's papers, we could then switch papers, and we could have completely different trend lines drawn. So what I'd rather do is have something that's already done for me and gives me a much better look at it. And the way that we do that is obviously with support and resistance. Okay, so we started with the sentiment levels, right, which are daily. Then we looked at trend base, which can be used on, I would recommend, hourly, daily, or weekly. I just personally don't really prefer like a 5-minute chart, just too much noise. But at any rate, with the support and resistance levels, I would simply say use a 50 and a 200-day exponential moving average. Can't get any simpler than this. So here what you've seen me do is fold this in to a chart with big trends percent R. And by the way, for those of you out there, don't go rushing off. I mean, you can remember big trends percent R. I told you what we did with it. It's just we've taken the negative scale from 0 to negative 100 and then flipped it and made it a positive scale from 0 to 100. And then your typical out-of-the-box indicator setting for it's going to be a 10 bar or a 14 bar. But regardless, we've extended it to a 30 bar setting. So that should, hopefully that clarifies what we're doing with that. At any point, you can see here where several things going on here. You can use these in a couple different ways. Number one, for support. You can see here and here. You can also look at, and you could look at this on the 50 bar or the 200 bar. You could also look at general crosses. I'm a big believer that, I like to look at just the fundamentals of the bottom of a chart and say, are we in a bullish or bearish period right now? And I look at, depending upon the system, I'll typically have some customized exponential moving averages to say, do I want to fight a overall bullish trend on a daily chart if it's an area like this? Going to be kind of hard, right? Typically, if we're going to have, let's say, parabolics on this, you start to fold in a lot here. This is the part in the presentation where I really like to say, if you enjoyed the parabolics, which I do a lot with the percent R, then you may want to stick to just that. But I also think it's very well worth mentioning to folks out there, and obviously if you've been around trading for several years, this isn't going to be that vastly new of information, but for those of you out there that years of your trading, this is a great tool. The 50 day and 200 bar, I mean, there's nothing secretive about this, obviously, but just to use it in a very, very systematic way and always be aware of it. But you can use it for a couple of different things. I always say from a systematic standpoint, two consecutive closes below a moving average would signify that it's been, quote, broken. 50 and 200 days are classic levels to watch. One of our best stock trading systems is built on the 200-day moving average. It's actually built on signaling us when a stock goes 100% above its 200-day moving average. So if your moving average is at $100 and the stock's trading at 200, then that's actually a buy. Most people will be like, whoa, the thing's got to be way overbought, and this is you're getting in too late. But if you, we have that built into the Big Trends toolkit at MetaStock as well. But just a phenomenal trend identifier, massive trends on that one. But typically that's for lower dollar stocks because that's what you see off and on. Anyway, Sukdev says SMA versus EMA. I like the exponential moving average, Sukdev, because the simple moving average, there's nothing wrong with it except for the fact that what it does, the difference is that one equally weights every bar in the timeline. So if you're looking at a 50 bar simple moving average, every day is weighted equally. And then in an exponential moving average, you're actually, as the days get closer and closer to yesterday, right, because it's really, you're looking at everything behind you, as they get closer to more recent, what's going on. They were actually weighting those days' price action more heavier. So it's actually faster moving and faster, it more reacts a little bit faster. But also, doesn't it make more sense to you just from a logic standpoint that yesterday's price action was more important than 49 days ago? So yeah, and you could take a look when you just change the difference. It's not a dramatic difference, but they are certainly faster moving. So that's why I would prefer an exponential moving average pretty much across the board. But at any rate, you can use these for support or resistance. Obviously, the 200 bar and the 50 bar when they cross is just a classic technical indicator of just a massive change in market trend. So very, very interesting. You can see here that it can also be applied to the VIX. So let's go all the way back to the beginning of the presentation, and remember what we did was we started out with sentiment indicators, and we were looking at the VIX explicitly with Bollinger Bands. I prefer Bollinger Bands, but I also don't want to constrain you. I'm giving you some more systematic and tangible things, but I don't want you to just take it and run with it without thinking on your own. I kind of want to now open you up to other ideas that you can take everything that we talked about and use it on other things. Obviously, the VIX is not going to be a longer-term trending or anything like that, but you can see here where, overall you can see the 50 and 200 days kind of, up and down, up and down. But when the 50 is below the 200, we're in a very strong bullish market, and vice versa. You can see here more specifically down to the day. I love looking at every day, looking at the VIX and seeing where it is in relationship to its 200-day moving average. If it's above it, it's going to find support at it, and if it's below it, it's going to find resistance. I mean, it's just it's not always very close to it, but when it gets to it, it's definitely a line in the sand that you want to be aware of. Just very, very interesting, good for you to watch. I wanted to also let everyone know that if you went to bigtrends.com/options profit course, which is the URL you see there, Price made a options profit course that we sell for $99, and talked to him today and said that, hey, what can we give to the folks over the ISC who join us in the webinar? So we'd like to give this to you today free of charge if you go over to the bigtrends.com/options profit course URL that you see there to the right of the arrow. Basically, what Price teaches you in there is our systematic approach to options trading and thresholds and levels that we recommend for you to have when trading options, i.e. time premium amounts, how much intrinsic, how much extrinsic. So very, very helpful for you to turn your options trading into a more systematic approach to make it much more fundamentally strong. At this point, I'll go ahead and pass it back over to our host. I think I hear him in there.
Yep, I'm here. I just wanted to thank you for the offer with the course as well. We've had Price on a few times. He's a great presenter as well. So I think the attendees will really benefit from that course. So I'll even check it out after I'm done here. But I wanted to thank you.
It's a great course.
It is, yeah, I'm sure. I wanted to thank you again for coming on today and providing your insights. I also wanted to thank everyone else who attended. If you have any questions, feel free to email us at webinars@isc.com. And if you want to learn anything about our ETFs, you can go to isc.com/ETF. There's a lot of product information there. You can sign up for trade alerts, just learn more about our tools that we have available there. If you're interested in the ISE number, you can just go to ISE.com/ISEE, and the values are available there. There's historical data. You can do 50-day trailing average. You can download the information. You can sign up for a daily email that gives you the ISE number for that day. So there's a lot of information there. And also I want to remind everyone that next week we're going to have Patrick Seresna of OptionsSource.net on, and he's going to be covering trend identification for ETF trading decisions. So again, if you have any questions or comments, feel free to email me at webinars@isc.com. And other than that, I hope to see everyone back next time. And thanks again, Andrew.
Thank you. Had a great time.
All right, great. Bye.
I got a question. Anybody there?
All right. Thanks, Andrew.
Hello?
Bye.
Hello, can I ask you a question?
Oh, I'm sorry. Who's
Hello?
this?
Hi, my name is Arthur. I was unfortunately I had been called away to an emergency. But is there any way I could view the webinar or archived or something?
Yeah, I forgot to mention that. If anyone wants to see this webinar, it's going to be available on isc.com/webinars. There's an archive link there. You'll be able to get this. It should be up, I'd say, by Thursday. We also put this up on YouTube, and it's it's youtube.com/optionseducation, and that should be available on Thursday as well.
And that's the seminar, the three ways to spot a trend.
Right. Yep.
A reversal.
Yep.
All right. I do appreciate that. Thanks so much.
All right. Thanks.
Have a great
Bye.
Bye now.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.